The Great Metals Massacre. What Wall Street Isn't Telling You. Imagine waking up to find that nearly half your wealth vanished overnight. Not because you made a bad bet, not because the economy collapsed, but because someone somewhere desperately needed cash. That's exactly what happened last Monday when precious metals experienced their most violent trading session in modern history. Before we dive deep into what this really means for your money, make sure you're subscribed to this channel. We're cutting through the noise that mainstream financial media feeds you daily. Drop a comment and let me know where you're watching from. Whether you're in Miami, Mumbai, or Melbourne, this affects you. Now, let's get into it. The opening bell nightmare. Monday's opening was unprecedented. Silver didn't ease lower. It plummeted to 71 per ounce in what can only be described as a market heart attack. But here's where it gets strange. Within the same trading day, silver rocketed back up 17% to $83. Think about that for a second. A 17% intraday move in a commodity that's supposed to be stable, that pension funds hold, that's considered a store of value. Gold wasn't spared either. The yellow metal that survived 5,000 years of human civilization dropped 20% from its recent peak. We're talking about $7.4 trillion in value. Gone. To put that in perspective, that's more than 5 times Bitcoin's entire market cap erased in just 3 days. The total damage? $10 trillion across precious metals markets in 72 hours. That's not a market correction. That's a controlled demolition. The warning nobody saw coming here is what almost everyone missed. The canary in the coal mine wasn't singing in the gold pits or silver futures. It was chirping in the crypto markets. 3 days before silver's collapse, Bitcoin flashed a crystal-clear warning signal. The setup was simple. Bitcoin needed to hold above $82,000 to keep risk appetite alive. Think of it as a barometer for how much pain investors could tolerate. When Bitcoin crashed through that level and tumbled to $74,500 over the weekend, the countdown began. Why does Bitcoin matter for precious metals? Because in today's interconnected financial system, crypto traders are the fastest-moving participants. They never sleep. Their markets never close. When they panic, it's like watching the first domino fall. You know the rest are coming. And they did. Silver opened Monday morning in complete freefall with gold right behind it. The correlation wasn't luck, it was cause and effect. The liquidation theory. Now, let's talk about what actually drove this selling, because it wasn't what CNBC told you. When you hear profit-taking or technical selling, that's code for we don't really know, but we need to say something. The real story is forced liquidation. Picture this. You're running a hedge fund with positions across multiple asset classes. You've got crypto, commodities, stocks, bonds, the whole menu. Your risk models say you're diversified, protected, bulletproof. Then Bitcoin drops 10% in a weekend. Suddenly your margin requirements spike. Your prime broker is calling. You need cash immediately. Not tomorrow, not next week, now. What do you sell? You can't sell your losing positions. They're underwater and illiquid. You sell your winners. You sell the assets that still have value. You sell what the market will actually buy. Gold and silver became the ATM machines for desperate funds. Not because these metals are weak, because they're liquid enough to absorb massive selling without completely freezing up. The East-West divide. While Western traders were panic selling, something fascinating was happening on the other side of the world. In Shanghai, where physical gold actually trades hands, prices were holding steady. And not just steady, they were trading at a massive premium to Western paper prices. At the peak of the panic, Shanghai gold was trading 43% higher than futures prices in New York. By Monday, that premium had compressed to 22%, but that's still enormous. Under normal conditions, arbitrage traders keep these prices aligned within 1 to 2%. A 22% gap means the arbitrage mechanism has broken. What does this tell us? Simple. Eastern buyers are accumulating physical metal while Western institutions dump paper contracts. 2 different markets, 2 completely different strategies, 2 entirely different time horizons. The smart money in Asia isn't panicking. They're watching Western institutions liquidate, and they're waiting patiently to scoop up physical gold at fire sale prices. The fundamentals didn't change here is what makes this whole situation bizarre. Nothing fundamental changed to justify a 20% drop in gold. Let's run through the checklist. Did central banks announce they're selling reserves? No. In fact, countries like China, Russia, and India have been aggressive buyers for months, diversifying away from the dollar. Did Tether liquidate its gold backing? Gold? No. Their reserves remained completely intact throughout the carnage. Did the U.S. government suddenly balance its budget? Hardly. They literally shut down because they couldn't agree on spending. That's supposed to be bullish for gold, not bearish. Did inflation disappear? Did geopolitical tensions resolve? Did the debt crisis evaporate? No, no, and no. So why is gold bleeding? Because someone needed liquidity so desperately they were willing to sell quality assets at terrible prices. When you see forced selling of this magnitude, it means something below the surface is under serious stress. What happens next? Two paths forward. We're standing at a crossroads and only one of two scenarios plays out from here. Path 1. This was the flush. The weak hands got shaken out. Forced sellers have exited. The bottom is in, and we're about to see a powerful recovery rally that catches everyone off guard. The evidence supporting this? Silver's violent 17% bounce suggests short covering and bargain hunting. The Shanghai premium indicates physical buyers see value here. If Bitcoin reclaims and holds $82,000, it would confirm that risk appetite is returning. Path 2. This was just a relief bounce inside a much larger decline. The real pain hasn't started yet. What we witnessed was a preview, not the main event. The warning signs? If Bitcoin fails at resistance around $82,000 and rolls over, if gold can't hold $3,300, if silver breaks back below $75, then we're in serious trouble. The next leg down could be even more vicious than the first. How to position yourself if you're a long-term investor who believes the monetary system is fundamentally broken? This volatility is noise. Your thesis hasn't changed. Central banks are still printing money. Governments are still drowning in debt. The reasons to own hard assets remain intact. For you, dollar cost averaging makes sense. Buy systematically. Remove the pressure of timing perfection and accumulate while others panic. But if you're trading tactically, you need confirmation before entry. Wait for Bitcoin to hold $82,000 for 3 consecutive sessions. Wait for silver to close above 85. That wealth didn't disappear. It transferred from those who were forced to sell to those who were prepared to buy, from those who panicked to those who stayed patient, from those who were over-leveraged to those who kept powder dry. The question you need to ask yourself isn't whether the bottom is in. The question is whether you have a plan for both scenarios. Do you know your entry points, your exit points, your position sizes? Because markets don't reward predictions, they reward preparation. What we just witnessed wasn't a normal correction, it was a warning shot. Something in the global financial system is stressed enough that institutions are dumping their highest quality liquid assets at distressed prices. They're selling what they can, not what they want. And when that happens, when forced liquidation enters the market, you're either positioned to profit or you become the liquidity for someone else's exit. The next 72 hours will tell us which path we're on. Watch Bitcoin at $82,000. Watch gold at $3,300. Watch silver at 75. These aren't random numbers. They're the battle lines that will determine whether fortunes are made or destroyed. Stay sharp, stay disciplined, and I'll see you in the next one.